Good afternoon, everyone. Thank you for accepting the invitation and joining our first webinar on corporate tax law in UAE. We understand that businesses in UAE have a lot of questions on the applicability of the law and regarding the various provisions, and we at Jaxa are committed to present the relevant information as and when the same is published by the UAE Ministry of Finance and Federal Tax Authority. Our intention is to explain the basic provisions of the law so that the attendees are aware of what information is available as of now, as well as what to expect going forward. Firstly, we would like to give a brief introduction to our firm. We, Jaxa Chartered Accountants, started our practice in UAE back in 2007 with 3 staff, and now we have grown to a staff strength of over 80 professionals catering to the requirements of our client base, which is over 1,500 in number. Our head office is in Dubai with branches in Abu Dhabi, Jebel Ali Free Zone, Sharjah, and also in India. We primarily assist our clients with audit, accounting, tax advisory, and other compliance requirements. We are also an ISO 9001-2015 certified firm, and we are the sole member of TIAG in UAE, which is an international alliance of high-quality accounting and audit firms having its head office in the United States of America. To begin with, we would like to introduce you to all of our speakers who are part of our Jaxa family. We would like to first introduce CA Jibi Joseph, who is one of the founding partners of Jaxa Chartered Accountants. He is a fellow member of the Institute of Chartered Accountants of India and has extensive experience in UAE in the areas of audit and assurance services and tax-related matters. He has been practicing in UAE from 2002 onwards, through which he has been able to gain extensive knowledge about UAE's economy and accounting and audit practices followed in the country. Next, we would like to introduce C.S. Santosh Sadanandan, who is a fellow member of the Institute of Chartered Accountants of India. Mr. Santosh joined Jaxa back in 2010 and has gained expertise in auditing, finance, taxation, and company formation procedures in UAE. Our team member describes him as an efficient team leader with exceptional managerial qualities. Finally, we would like to introduce Mr. Sajid N., who joined Jaxa in 2010. He's a resident tax expert who was actively involved with assisting our clients with their VAT-related compliances from its introduction back in 2018. Now, we will proceed to begin our presentation, and our speakers will explain the basic provisions of the UAE corporate tax law as published by the ministry. We'll be having a short Q&A session after our presentation, and we request the attendees to pose their questions. We will address some of the questions before the end of the session, and we will try to have it answered based on the information available. For the questions not taken up during the session, we will make sure that your queries will be answered within the next few days on your registered email IDs. So we urge you to post your questions on the Q&A option available. You can always reach us for assistance on the contact details that will be displayed at the end of the presentation. We also would like to remind you that a separate session on transfer pricing is to be scheduled and be conducted on January 23rd, 2023, Monday at 3 p.m. UAE time. We hope you have already received the invitation to this webinar and look forward to your attendance. You can also visit our LinkedIn page to find the registration link. Transfer pricing is a crucial aspect to corporate tax law, and we urge you to attend this webinar to know more. So let's get started, and I invite our first speaker, Mr. Jibi Joseph, to take over.
Thank you, Anna, for the introduction. As continuation to Anna's message, we will be copying that registration link for the webinar on transfer pricing on the chat box. Please look in the chat box and register yourself for the next webinar, because it is very important, especially for companies having transactions with the related parties and connected persons like owners of the company, shareholders, directors, etc. So it is very important to attend that meeting also. We will be conducting that meeting in association with some experts in this field who is already doing transfer pricing, etc. in India. So it will be a good session to attend. And also regarding Q&A, we have around 400 participants, so it may not be possible to answer each and every one. We will try our maximum to reply in Q&A section itself. And towards then, we will be having a discussion on core questions or important questions. So if someone is unanswered, please feel to contact us through our email or phone numbers. So let us start with the presentation. See, until last year, we all know that UAE was branding itself as one of the tax-free jurisdictions in country and inviting business to come and do business from UAE. So we need to understand why all of a sudden UAE changed its brand as tax-free jurisdiction. As we all know, UAE never had any cash flows issues. We always had a surplus budget. So why UAE introduced corporate tax? Okay, UAE is a member of OECD inclusive framework. Okay, OECD means it's an organization called Organization of Economic Cooperation and Development. Basically, it is an organization of around 40 developed countries, mostly European countries, plus US, Canada, Australia, and some other developed countries from the rest of the world. So over a period of years, this developed or rich country, they identified that many companies which is incorporated in their jurisdiction are shifting their operations or part of their operations to tax-free jurisdictions, and they are losing income. So they joined together and tried to find out a solution for that one, and then they came up with an action plan, which is known as Action Plan 5 of the OECD Base Erosion and Profit Shifting Project, commonly known as OECD BEPS. So the first line towards that one, like now OECD asked other countries, told other countries that if you want to deal with us, if you want to do business with us, then you should be part of this OECD inclusive framework. And the other countries was, I can say that, forced to join that inclusive framework. And now there are almost 150 countries in that organization or in that framework. And UAE is also one of the member in that OECD inclusive framework. And now UAE is bound to follow the guidelines of OECD. So OECD, they issued some guidelines on what each member country should follow in order to have them whitelisted in their list to deal with. First, we heard about ESR in 2019. That was the first step towards achieving the conditions to be a member of OECD inclusive framework. Okay, before ESR, actually, we know that UAE started VAT in 2018, but that has nothing to do with OECD. Rather, it was a requirement for GCC Common Tax Framework. Okay, then after ESR, we heard about, asking every free zones and other license issuing authority asking companies to submit UB ultimate beneficial owner details. So that was the second step. And then we heard about CBCR. Mainly it was applicable for multinational companies whose global turnover is above euro 850 million. And then in 2022, UAE announced that in January 2022, UAE announced that they are going to implement corporate tax. So this was, and as per the OECD, the minimum tax rate prescribed is 9%, and UAE decided to follow the minimum tax rate so that they are still attractive from the point of view of doing business. Okay, this is the official version of why UAE is introducing corporate tax. A competitive corporate tax regime based on international best practices is expected to cement the UAE's position as a leading global hub for business and investment and accelerate UAE's development and transformation to achieve its strategic objectives. This is the official explanation about the introduction of corporate tax. Okay, then let us understand what is corporate tax. Most of you may be knowing, but if anyone does not know still what is corporate tax, it is a direct tax levied on the net income or profit of corporations and other businesses. Mainly it is on the business profits. It is also known as corporate income tax or business profits in some other jurisdictions. Let us identify some important dates. It was on January 31, 2022 that Ministry of Finance announced that that the corporate tax will become effective for financial year starting on or after June 1, 2023. So it was on January 31 last year that it was announced. And on 28th April 2022, Ministry of Finance released a public consultation document which essentially contains the various articles which they plan to include in the new law, and they asked the general public to submit their comments and views about the contents by May 19, 2022. Okay, then there was a long pause, and on December 9, 2022, we heard that, or we understood that Ministry of Finance, through Ministry of Finance and Federal Tax Authority, they released an unofficial translation of Federal Decree Law number 47 of 2022. In fact, when it was released to public, they also told that this was published in the official gazette on October 3, 2022. Actually, the law was published on October 3, 2022, but to public, it was released on December 9th only. And in the law, it says that the law will be effective within 15 days. Within 15 days from its publication in the official gazette. So the law became effective starting from October 18, 2022. And in it, it says that the corporate tax will be applicable for the first time in UAE for the first financial year starting from 1st June 2023. So this is the dates until now. Now let us have a quick overview of the law. The law contains 20 chapters and 70 articles. If we go through the law, in most of the articles, they are saying that further information will be made by a cabinet decision, or further details will be declared in a cabinet decision. So that cabinet decision is yet to come. They are not yet published the cabinet decision. If you remember when what was introduced, at that time also initially they issued a law. After that they issued an executive regulations. Here they will not be issuing an executive regulation. They will be issuing a cabinet decision. It could be a series of decisions, or we don't know whether it could be a single decision. So let us once more understand what will be the effective date for the corporate tax for companies following different financial year. For a company whose financial year is starting on June 1, the corporate tax will be applicable from 1st June 2023. And for a company whose financial year is from July to June, the first financial year will be July 1, 2023. And for a company which follows Gregorian calendar year, the first applicability will be for the financial year starting from January 1, 2024. And likewise, for a company who has financial year April to March, their financial year for tax purpose will start from April 1, 2024 only. So if there is any company whose financial year is ending on April 30, those will be the companies who will be getting maximum period to implement this corporate tax. So now you notice that okay, there is enough time to maybe to implement the tax law. It is not like that. You should be prepared. You should be start preparing from right now for various matters. Let us just go through how or what you should consider now. First, whether you have to identify whether you are coming under an exempt person category or not. But in law, there are only very few categories which are exempt person. Most of the companies will come under taxable person itself. And what is the accounting and tax period for your business? That's also you should understand or regularize, I mean, at the earliest. Why I said you should understand or regularize means in law it says that generally the financial year for corporate tax purpose will be Gregorian calendar year, but it also allows companies to follow different financial year provided it is as per laws and regulations. So you need to, if some companies, I mean, many of the companies are even not having financial statement currently. It is a fact because there was no authority to check up until now. So the companies who are not having a financial year until now, they need to decide what will be their first financial year. And then you should understand, or you should know by when your business will need to file the first corporate tax return. Generally, it will be within 9 months from the end of your financial year. And what elections and applications should your business make for UAE corporate tax purpose? For example, which accounting standard you must follow? This all you need to decide right now. And another point to consider is how the UAE corporate tax may impact your business obligation liabilities under contracts with the customers and suppliers. If you have like contracts which extends to maybe 2-3 years, you need to see how you should recognize income, etc., according to the milestones achieved, conditions mentioned in the contract, etc. And another thing to consider is what financial information and records your business will need to keep for UAE corporate tax purpose. And if you have multiple companies, if you have more than one company, whether you need to decide whether you to form a tax group or not. If you are a related party, you need to assess that arm's length principle is followed and you have enough transfer pricing documentation. As I said in one of the previous articles, the law is effective from October 18, 2022. So you are bound to follow the various clauses of the law starting from that date. Even the record keeping and that kind of requirements, you must start from that day itself. So you cannot wait till your financial year starts. Even before that one, like starting from 18th October, you are supposed to follow the rules and regulations mentioned in the law. Now, the law has included one article called General Anti-Abusive Rules. This is like a transition provision or a provision to cover up any actions taken by companies to take corporate tax advantage. Let us see what it says. This article applies to a transaction or an arrangement. If having regard to all relevant circumstances, it can be reasonably concluded that the entering into or carrying out of the transaction or arrangement is not for a valid commercial or other non-physical reason which reflects economic reliability, and the main purpose of doing it is to obtain a corporate tax advantage. So if you do any action which may result in a corporate tax advantage for you, it may be considered as an anti-abusive action. So you should be careful if you want to, like, a company as part of its tax planning. Someone may advise you, okay, don't depreciate your assets this year. You keep it and start depreciating next year. Or maybe if some of your assets might have impaired, don't create any impairment loss or don't book any impairment loss this year. Let us book everything next year. You may not create provision for any expenses, rather book it as expenses in the coming year. So those kind of actions should not be done because it may result in corporate tax advantage and will be counted as an anti-abusive action. This is the only article in the law which says that it is the authority who will have to prove that you did some anti-abusive actions. So it is on the authorities responsibility to prove that a company did something wrong. Also, law has included some transaction rules. Mainly, it says that opening balance sheet for the first tax period is the closing balance sheet for the financial year that ends immediately before its first tax period. And it says that if there are any related party transactions or related party balances, you must make sure that arm's length price has been followed while you close the balance sheet for the previous period. So basically, what they are saying that the opening balance sheet or closing balance sheet for the previous period should take care of the various provisions of the law. As I said, you should create enough provisions. You should create enough provision for remembrance laws. You should depreciate your assets. Like you should segregate all your income and expenses properly in accordance with the accounting standards you follow. And also, the law says that or for the purpose of these two articles, like the balance sheet and arm's length price on transactions with a related party, the official date, the effective date will be the date of publication in official gazette. That is for this particular article, it does not even give 15 days grace period. The law is effective from October 3 itself. So it is very important that you should not play around with the numbers right now. Okay, you should make sure that you are following the rules and regulations strictly now itself. Okay, now until now I just gave you an overview of the law. Now we need to go through the various articles or clauses in the law. To navigate through further presentation, let me invite Mr. Santosh, who will be handling the next session.